Welcome back to the Kelowna Real Estate Podcast. I'm your mortgage broker host, Taylor Atkinson.
And I'm your commercial agent host, Matt Glenn. What's happening, Taylor?
Oh man, relived childhood yesterday. Went to the Vernon water slides. Amazing. They did a wicked job.
Yes, that is awesome. I went there as a kid when it was Atlantis. What's it called now? Splashtown? Splashdown?
Splashdown, yeah.
Yeah, Splashdown. It's awesome. We went there last year with our kids. It is fantastic. What a great day. Did you guys rent a cabana there, or did you get a picnic table? Or
No, they got like hundreds of picnic tables with umbrellas. So it was my birthday yesterday.
Happy birthday.
Thank you. Yeah, I lived at the water slides in West Kelowna. Mariners Reef and Wet and Wild were the names of, when they did the name change. But like, it was great, man. And like Joey and Leo, 2 and 4, just loved every second of it, surpassed expectations. And they're still investing there. Like they're building 2 more slides right now.
Yeah.
Yeah, I know you talked about this last year. It's been on the list. So if you haven't checked it out, if you got kids, awesome place.
Yeah, agreed.
Considering where we are right now as well, like we can talk about it a little bit. We just had Bank of Canada come out with, one of their 8 announcements a year. Nothing changed, right? Overnight rate, variable rate stays the same, which was as expected. Essentially, to summarize what's going on there is inflation is, still higher than we would like. So really the mandate of Bank of Canada is to increase rates to curb inflation. However, it's kind of not high enough for them to do that, especially economically where we're at, GDP, job numbers. We are not doing that great as a country. So, they don't really want to kind of stimulate the economy to have the offset of inflation and vice versa. So they're in that neutral period where they're just kind of sitting on their hands, which is good, provides some stability.
Do you anticipate any rate changes this year?
I mean, yeah, well, when we spoke with Brendan Ogmanson a couple episodes ago, yes, there should be probably like a quarter point, maybe half a point in the next 12-ish months. The reason I say should is exactly that. Like inflation just keeps in that higher level. Like it does, come down, but as we all know, like gas prices, grocery stores, like it's still high. And maybe this will just become more normalized, right? Like inflation will be based on previous years and the trajectory it's going. So once we get some more stabilization there, but I think a lot of that inflation was driven from conflict in the Middle East, right? Having fuel prices just absolutely skyrocket because we couldn't get transport. So I think with that, hopefully resolving, let's just hope leadership in the States kind of stops invading countries.
I would not plan for that thing to be resolved in the short term.
Yeah.
There's no exit strategy.
Yeah, we'll see what happens there. If there's more stabilization and we can kind of curb inflation a little bit, like maybe a quarter point increase, that would be digestible to everyone.
Quarter point increase of the interest rate?
Yeah, really. If they're going to have to kind of bring down inflation, like let's just hope it kind of settles down naturally. But that's likely, on their list of next little steps. But we've seen fixed rates finally drop, right? So the bond market was up, again, primarily because what was going on in the Middle East, that had a lot of upward pressure. As soon as that had a resolution, fixed rates have kind of come back down. So yeah, we're seeing that spread between variable and fixed kind of shrink, and people have a few more options.
Yeah.
Other things in the news, I mean, not that we know much about it. I don't think anybody does. Typical government comes out with a policy, doesn't really have anything to back it, but essentially federal and BC government announced $1.4 billion initiative to purchase 2,200 unsold vacant condos across the province, specifically in the Lower Mainland. That's kind of all we'll talk about at this point. I'm sure in the coming months, there'll be lots of media on that. I don't love it personally. I think, you're setting a precedent now for more government intervention. What developers get the bailout and like who doesn't? Like the whole point of all these policies in the previous few years with speculation tax and foreign buyers tax and vacancy tax and flipping tax was to suppress our, residential market to allow people to buy. And now that they have kind of like forced that and undercut these units to drop in value, the opportunity should be presented to, home buyers instead of the government coming in.
Just like let the values fall.
Well, let them fall to a point that people are going to buy them. Like, I don't understand, why we're getting involved as a government. It doesn't
It's
make any
actually,
sense.
honestly, like on a kind of a tangent, it's actually amazing that the foreign buyer ban is still on. Like,
Yeah.
I
Yeah.
don't understand what problem this is solving at this point.
Yeah.
Like we're buying 2,200 condos, but we won't let anyone that's not a Canadian buy one. I just don't
Exactly.
understand. So I have heard rumblings that like Kelowna's on the menu too. They might get a couple here. I don't know if that's true or not.
Like, it's taxpayers' dollars that are then buying these units to, one, help the developer, but two, I guess, provide some form of housing.
Housing prices, it's just expensive. It's going up all the time. Outpacing inflation. Is this sustainable to have house prices go this high? And it says like this, the government is basically just saying, we want the house prices this high.
It's sending a mixed message for sure. I think the confidence in the government, you're trying to appease one sector with, a handful of developers, and you're pissing off first-time home buyers, but then you're coming out with first-time home buyer policies, and then you're pissing off the developer. Like, just back out of it and let the
There
market
is like an
self-police.
amazing amount of like lever pulling. Okay? It's just like,
Yeah.
it doesn't seem to even be focused in one direction. It's kind of crazy. It's just, we're all along this ride. There is benefit of a rent to own program, but I guess like a government, like you're having all these unsold condos, the government comes in, buys them, does rent to own program for first time home buyers or whoever to buy it, personal residence, I assume. I guess we don't know. But like,
Yeah.
it just seems like that is just to keep house prices high and make the banks happy. Right? And the developer can move on to start building other homes.
Yeah. We'll maybe do a full episode on this in, a month or so once we actually get some data that's coming out of this. Because, yeah, like we said, typical just kind of comes out with a headline policy. Like, there's not a lot of transparency on how it's going to develop over the next, coming months. But kind of speaking about, investing in local economy, today we had on President of Valley First, Simon Mills, awesome guest. Credit unions, I always knew they were very important to our local economy. I don't think I probably knew how important they are and kind of, how they started. So he kind of pulls back the curtain on that. But yeah, awesome to see. Like, generally, like as a mortgage broker, when clients are coming to you looking to, build houses or buy specific, very unique properties within the region, whether that's like ALR, like agriculture, farmland, wineries, vacation properties, stuff like that. Credit unions are the go-to. I think it's because they know the area so well, they know the risk and they know the opportunity, but they really invest in driving our local economy and self-employed people. So yeah, it was a fun show chatting to him.
It was. He's a funny guy, and it was a good show to record. Glad we had him on. Obviously, like Valley First too is a huge pillar in Kelowna business community. So
yeah, so enjoy the show, guys. We had a bit of a hiatus the last few weeks. Summer vacations kind of been. We're all trying to enjoy the summer. It's been an awesome summer so far. So knock on wood.
Been great. It's been a great summer. Yeah. Also, don't forget to like and subscribe. Whatever else you do to promote our show. What do you do? Comment. What else is there to do?
Yeah, comments are great. Hey, like, get some interaction, especially when people have questions for the guests. We can always relay those on, and hopefully they get back to you.
Absolutely.
Yeah. Okay. Enjoy the show, guys, and enjoy summer. All right. Welcome to the show, Simon Mills from Valley First, Tru Cooperative Bank. You guys just had a rebranding name change. Maybe we can kind of start with your position and what's going on in the business.
Thank you. And I really appreciate the invite to be part of your podcast today and have a conversation around Kelowna, which is I'm super passionate about and love talking about Kelowna and the opportunities. So thank you. Yeah, we have gone through a rebrand in the first half of this year. And we're now, instead of First West Credit Union, I'm the president of Valley First, which is a division of the Tru Cooperative Bank, which was previously known as First West Credit Union, which was a credit union formed through merger of four credit unions really, which was Enderby District, Valley First, Envision Financial, which is in the Lower Mainland, and then Island Savings, which is on the island. So those four brands make up what is now Tru Cooperative Bank, and that aligns with our recent federal OSFI approval that came through, and we're now a national credit union. So we're now able to operate outside of BC and across the country, which is really exciting. And that all came at once. We had a new name a new online banking tool, and also our federal approval came in the first half of this year. So it's been a very exciting start to 2026, that's for sure.
Yeah, you're a president making moves.
Yes, yeah. And we've already started. So we've already launched our mortgage broker channel in Ontario, and we're funding residential mortgages in Ontario already, which is really exciting. So now we're set. We're ready to support members who want to do business outside of BC, which is already happening.
And is that primarily what the purpose or opportunity was, to do interprovincial federal lending, or does it change internal policies as well? Can you guys go into different like assets or type of lending or small businesses? Like, what's the benefit?
No, but the benefit allows us to continue to grow and grow potentially with like-minded credit union partners outside of BC as well. But really, the idea for us is to continue to grow and be an alternative financial institution for our members too, and support them in their growing needs. You know, we see a lot of our members move outside of BC, you know, with remote work, and COVID really drove that change. And so we want to continue to support those members. We don't want to be tied to borders within our country. It allows us to support in the best way possible. And our standards are already operating within OSFI anyway. So it wasn't a big change from that perspective.
Nice.
Explain your career path. How did you end up the president of LA First?
Well, it's an interesting one, actually, because I came to Canada in 2014. I used to work for HSBC, and I was an international trade banker with HSBC. So my role there was really to deal with importers and exporters. And they sent me to Vancouver in 2014. And that's where I spent a good chunk of time dealing with importers, exporters, rolling out new products and solutions for HSBC. But then I didn't want to leave Canada. I didn't even know what a credit union was when I joined in 2019. Came on board to lead the commercial banking division, continued to grow and create opportunity there. And it sort of flowed into the president role about 3 years ago, which was quite exciting when we went through some changes. So it's been a journey, but actually before 2019, I didn't know what a credit union was. I'd never heard of one. We have building societies in cooperatives in Europe and in the UK, which is where I'm originally from. But I remember when the opportunity came up, I was like, well, what's a credit union? But then when I got to understand what a cooperative financial institution really is and what it can do, and the values and the purpose of the organization and how they were formed in these communities and what value add they bring, it was so powerful. Plus the opportunity to live in paradise, which is the Okanagan. It was an easy transition.
So did you kind of choose Kelowna, or did Kelowna choose you? How'd you end up here?
Well, originally when we came here, I came up for 2 days to tour around, meet the then president at the time, and we fell in love with Kelowna. We traveled through on our motorbike. This was before we had kids, and I love my motorcycle. So
yeah,
my wife and I would travel through, and we would visit the area, but we never spent a lot of time. And then we spent a couple of days here and literally fell in love with it. I had a 1-year-old daughter at the time, and we wanted to grow the family, and we just knew that this is where we could have a family, grow a family, but also it was right smack bang in the middle of the region that I covered. So Kelowna made sense, and it's just such a great community. It's been so welcoming and warming. The last sort of 7 years have been pretty fantastic, really.
In your line of work, you're paying attention to how the economy's doing, how the business is going. Like, what kind of changes have you seen from then until now? And I guess all the crazy times between. What are you noticing?
I can speak firsthand to that, because when I came here in 2019, and the idea was we would move here, we would look around, we would get to feel for which area do we want to live in and which area do we want to buy in. So we rented for the first year in the Lower Mission. We thought, that's easy. Market shifted, COVID hit, and houses we were looking at suddenly, went up 20%, 30% overnight. And actually we got into the struggle where we were unable to purchase a house because of either the asking price, the conditions that we were, I wanted an inspection.
You wanted a crazy thing like an inspection?
I know.
Come on.
Like, who? Yeah, at the time. At the time, everybody was, I couldn't compete. And 21, 22 failed offers we had. And it got really challenging.
Yeah.
And the time when we had to move out of our rental too, because that had been sold. So the good out of that situation though was One, the community support I got to find accommodation to keep us here, because again, at the time, short-term rentals was booming, so the rental space was really, really tough. But then also we found a spec home that was partially constructed up where we live now, and we were able to purchase that. So it was a real journey, but oh my gosh, did it explode. That really put us on the map. Because it was fairly stagnant before that, I would say is a word I use, but that really boosted Kelowna and the Okanagan, and really was the catalyst, I think, to a lot of the change that we see now. The airport, our UNESCO designation for gastronomy now that we have, the expansions of college and the overall growth within the city. So that really suddenly, lit a fire under it, which was crazy. They were crazy times, but yeah.
Coming from the UK, like having a more international background, working in kind of larger cities, do you think like Kelowna's moving in the right direction? Obviously, it's a beautiful place and the infrastructure's, wonderful, but like economically, is it becoming unhealthy? Like you went through that difficult time to buy. Are you looking at this as, hey, this is just like natural growth and growing pains that cities kind of have to endure? Or what direction would you like it to see to go from now?
And it's a great question, because I think we're at a pivotal point in the city and in our growth, and within not just BC, but then also the Canadian landscape as well.
Yeah.
Overall, I would describe the sort of the Okanagan economy as, I would say, it's resilient and it's fundamentally healthy. And we continue to sort of benefit from some population growth. We have seen a bit of migration out in certain sectors, but it's a desirable lifestyle. There's a ton of entrepreneurial energy here. It's a more diversified economy than I think people realize or think it is. So, we have technology, professional services, agriculture, agritourism, healthcare, tourism. We all know about the tourism side, but constructions and logistics really would all contribute to that, the region that we have today. But that said, I think every growing economy faces pressure: housing affordability, labor availability, infrastructure needs, and just general business operating costs are creating challenges that need attention. And we need to be really mindful of that and be really intentional. So I'd say we're not lacking opportunity. The challenge is making sure that we can keep up with that opportunity. We're seeing some readjustment. We are going through a bit of pain, I would say, in certain areas. You guys see it with land values and things like that. But I think the economy's healthy. We have a higher unemployment rate. So healthy, a question mark next to it. But we're in a phase right now. So we just need to make sure that we continue to support local business, small business.
And that's kind of primarily where, I could be a bit off, but that's primarily where credit unions' strength is, right? In supporting local businesses, entrepreneurs. So like, what are you guys specifically looking to invest in, like deploy capital projects? Is it construction? Are you guys kind of pulling back on that? Like, I'm talking about like from raw land to residential to commercial build out, or are you looking for more like active businesses?
All of the above, I would say. One of the things with the credit union, and one of the things we strive for, is consistency. So regardless of what's happening in the market environment and what we're seeing, we don't suddenly restrict appetite in certain areas. Do we do more due diligence in certain things like real estate right now? For sure, because we need to make sure that, as custodians of our members' deposits, that we are doing a full assessment. We fully understand what we're doing, but also making sure that the members that we're working with, have a sustainable plan, and that they're also, looking to achieve what they're trying to whether it's a project or something along those lines. But we love hospitality, agriculture, we support, small business. We're continuing to diversify our business as well. So we want to do more in the operating, business space as well. Do we do more due diligence in certain sectors? Yes. Or ask more questions, just because we want to make sure as custodians of our members' deposits that we're doing it correctly and we're taking that into account. We're not saying, no, we don't want to be in certain spaces, because that doesn't really help our members and our community. And if you look at our community as you drive around, small to medium business. Now, just for the record, I don't like the term small business, because there's nothing small about business. To quit a job that pays you every 2 weeks, it gives you benefits, that RSP contributions and all of that good stuff, to start a dream or to grow a business. There's nothing small about that. And so I tend to call it independent business, but it's the backbone of our economy. It's about the market.
Have you seen any sectors like outperforming others or underperforming, I guess, at the same time? Like,
Well, I would say healthcare continues to be a strong performer. So
okay.
whether it's dentistry or healthcare support in that space.
So from my personal experience, I'm working with a few dentists looking to release and buy spaces. So like, to that also.
But I think that also goes to the demographics of our market too.
Yeah, we have nice teeth.
This is it. Yeah. Well, the British aren't necessarily known for their nice teeth. One of the running comments. But I'm working on it. But that space is good. Agriculture is sort of, I would say, to a certain degree, stabilized. A couple of tough years there.
Yeah.
And we continue to see a readjustment in land values and values in that space. Yeah. That's a challenge. And general residential construction, from my perspective, where I see sort of activity still, townhomes still continue to be activity in that space. Single family homes anywhere into that 1.5 million with a suite in with the CMHC sort of financing. Everything else is pretty slow right now. But the performance numbers don't make sense right now. So you have to have something rigid.
What do you think has to give on the numbers? Like, you think it's land values, or is it interest rates, or is it labor costs or material costs? Like, where do you see the give for this market to stabilize? Because like, when I think about it, like the land values are high for sure, so they have to come down. But like, I don't see wages coming down. I don't see building materials coming down. Like taxes, like DCCs or like government help. Like, where do you think is going to give to help with the affordability?
Well, it's a great question. And it's a topical conversation right now. You're not going to see wages coming down. People can't afford for wages to come down.
No, they're already kind of low.
Yeah. Interest rates, I think, how much lower can you really go? We're only just coming out of those 5-year fixed rates that were 2%, back then. And we're actually, we're coming to the end of that sort of repricing as such. But that repricing is hitting the commercial side too. I think it has to be land values. I mean, there was a lot of people getting into development and a lot of speculation that was driving up land values. And then the taxes and fees. We'll see some compression when it comes to some compression in building costs, and as demand is falling off, contractors are tightening up on their pricing. But ultimately, everything you're importing and if you look at the international market with imports and the trade barriers and even the quota system right now on steel out of Asia, it's artificially keeping all the prices up too because you're having a tariff on your import. So really, to me, it's the land, is that input land cost, and then the taxes on top of it. We're seeing a break, obviously, in the DCCs in Kelowna, which I think would be good. There isn't much wiggle room, so you got to make sure we build a bit more contingency into that.
It seems like it's a good opportunity for like a extremely efficient like builder and developer to take advantage of the market. It seems to be the only way to make it even come close to penciling, right?
We've got a high amount of vacancy coming on for rental, which is good. It's sort of stabilized. I wouldn't say the rents have stabilized yet. There's still volatility in it, but as that gets absorbed, it's going to, also contribute to the city being attractive to migration. But we need jobs. We need good paying jobs, sustainable jobs. We need to focus there, because if the economy and jobs are not there, then why are people going to move here?
I mean, I think we need also, we've spoken about this, is less volatility from a leadership role. And that comes into play. I mean, haven't really spoken about it yet on the show, but we will, is like government bailout for developers in Vancouver right now. That adds so much volatility of like, how does that set the precedent and where does it stop and who gets the bailout and how does that look? But government intervention at a housing shelter, should not be, well, there shouldn't be government intervention. And so they've kind of like caused the ripple and then tried to stop it. And then like they're constantly playing with that stuff. So I think for me, that's one obvious thing, is we need less intervention, and then also like expectations from consumers. I think that's the biggest one is, we all want a nice house with all the bells and whistles and pools and garages, but at the end of the day, like, it's just shelter. And if we want this quote unquote affordable housing, and that's not $1.5 million home, there are builders that can build, I guess, more realistic shelter needs, but no one's really willing to build it and no one's really willing to buy it, right? We all blame the government of like, well, we need cheaper land, DCCs, interest rates, all these things. But at the end of the day, like if you just want somewhere to, sleep and eat, we need to reset our expectations a little bit.
I mean, I still haven't seen the terms and conditions of that sort of bailout. So I don't even.
Neither have we.
Nobody has. Yeah.
That sort of stuff creates a ton of noise, which like bankers don't like volatility. Like some bankers, like trust me, investment bankers, those guys that make money off the volatility.
Day trading.
Yeah, but for us as traditional bankers, whether we're retail, wealth, or commercial strict business banking, we want stability because that creates predictability. And through that, then you create investment and people feel comfortable with continuing to invest. Buy a new building, hire new people because you feel comfortable investing in growth and there's too much volatility. The thing is, I think as well, if you're going to put $30 million into building like a 6-story condo, $30-40 million, I mean, that's a big, huge chunk of money. Yeah. You got to know, one, that you're going to get a good return because that's a huge amount of risk, but also, as a lender, I need to know that, and custodians of my members' deposits, because it's my members' deposits that I'm going to get money back and make a good return for my membership. But also, the developers need to know that they are going to come out too. So it is a challenge. But also, there was a lot of speculation going on, huge amounts of speculation up the price.
Yeah. So, I mean, you've said it a couple times, custodians of our members' deposits. Can we kind of talk about, maybe we should have started with this, but probably a good way to finish is, what is a credit union? How does it operate differently than, one of the big 5 banks?
I'll start with what's the same in the sense of, if I can put it that way. So we offer the same products and solutions a chartered bank would do. So whether that's mortgages, loans, savings, deposits, GICs, wealth solutions, so wealth advisors, all the way to the sort of traditional retail banking. So when it comes to products and solutions, we're the same. We're highly competitive in that space. So we're very strong in residential mortgages and things like that. What you get with a cooperative financial institution like ours or a credit union is that we rely on our members' deposits to fund the growth in the business. And the reason that the Valley First was formed in the first place, like some 80 years ago, was the big charters left town because it was a challenging agricultural environment at the time. So a group of farmers came around a table, formed a credit union, invested in some savings they had, and lent it in the community to grow the community because there was nobody here to support the growth. And so that's how we formed. And so we take those deposits in and we deploy those through many different channels, whether it's commercial, business, or retail. But the profits that we make and the money we make goes back into the system for the benefit of the members. So, you come and open an account with us, $5, you buy shares. So you get shares with your $5. You're my shareholder. We don't call you clients, we call you members because you're a member. And I'm accountable to you as the shareholder. So my responsibility is not pure profit. I want to make as much money as humanly possible. That's obviously, we want to be profitable, we want to be sustainable. But I've got a different lens in the sense of we can lean into projects and businesses that maybe other institutions wouldn't because we know our market, we know the people, we know what's going on, and we have a bit of a bubble here in Kelowna. We do, which has supported us and benefited us, but we get to make decisions in a more local way. We are local. My credit decision team are here, my lending teams are here. Yes, we're spread across BC, but each region knows their market. We connect with the elected officials, we connect with the members, and so we can add that value. And the money we make goes back into the system. So we just launched our new online digital banking platform. We can invest in things like that, which is better for the members rather than an unknown shareholder in an unknown jurisdiction or country, because we're so worried about our share price. And then we deploy money, lastly, on that through our community investment. So we support a number of initiatives in our market and areas and sort of needs, whether it's health and wellness, mental health, food insecurity. We're big supporters and work closely with food banks across our market. All sorts of things. So we can lean into that community aspect because at the end of the day, I love this community. Like, this is home. I'm not leaving. And I want to see it continue to grow, flourish, and be a great place for my kids when they grow up too.
Yeah.
Hey, what are you seeing there, guys? I mean, anything that you want to share?
Yeah, I mean, on the residential side, it's been pretty flat this summer. But like you said, a lot of the 5-year fixed from 2021 era are coming to maturity. There's lots of, I guess, opportunity for people to restructure some finances and some debt. But I think primarily what we've been seeing, like working with credit unions on residential builds, it's definitely been harder for people to justify new builds, right? The cost of it. Really, you can buy an existing house and do a bit of a reno. Like there's probably more value there than building a new house right now. So that's where the struggle is, we find, with home builders. And then on the commercial side, it's a bit stronger than I would have anticipated like a couple of years ago. And like you said, like there's tons of entrepreneurs in Kelowna, which is interesting, right? Lots of dentists looking to expand, but all these self-employed people with no dental benefits can still afford a dentist, obvious. It's been a good market. A couple of years ago, I was more pessimistic or frustrated, like, oh, the market here is not moving. But like you said, when you bought or when you tried to buy in 2021, that was a terrible market.
Yeah.
The only way you could secure something is over ask, no subjects, quick close. Like there's so much risk. Now it's balance. It's like, okay, a property's been on the market for a month or two. They get an accepted offer. There's 10 days for subject removal. There's inspections. There's due diligence. Like, we all got used to this like crazy time where things just moved so quickly and there was no real thought in it. And a purchase price was $1 million or 1.1, but nobody really cared because it was such a big number. And, you didn't really think about your mortgage payment at the time.
Your mortgage rates were low too. So
yeah,
even if you were thinking about it, it still made sense.
That's what people said to me. They said, well, your mortgage rate's only 2%. It's like, yeah, it is today. But, where's it going to be in 5 years' time? Who knows? It's not going to be 2%. I know that. So,
yeah. It's kind of interesting listening to some podcasts about the US, and it's like they have the 30-year mortgages. So like they locked in low rates, but then they can't sell. So like now like the sales are way down because nobody can, like you're going to take a huge discount on a house. Like your rate is just fundamentally different than the house you have. So like nobody's selling. So it's kind of a interesting way to look at it.
Well, I think what it has driven is a real thought into affordability. And households really having to think about affordability. What can I afford realistically, and planning for the what if too. So we have a lot of planning conversations. But people would say to me, oh, did you go variable or fixed? No, I took a fix because I was never going to see a fix that low. So I'm like, I'll take that all day long. But I think a lot of people are now looking at it going, okay, well, what's my lifestyle? What do I want to achieve? Okay, well, maybe I'll take a fix because that gives me a guarantee on what my payment's going to be for the next 5 years, and as opposed to playing the variable game. The volatility causes issues in that side of things.
Yeah.
But it's definitely an interesting environment, though. I am seeing more activity, more discussions, more innovation, I would say, in local businesses, which is really good.
Yeah, like my business, like switching into commercial real estate and focusing on leasing. My God, there's so much activity in the leasing space. Our whole office is just staying busy with this. Like sales are down for sure this year, but like there are businesses making moves everywhere. And it's kind of nice to see, like it's on the residential side, you just don't see that right now. But it was very eye-opening to me as how many like businesses are on the move or expanding or opening new spaces. And it's been a great witness and be a part of.
And that's good to hear. I have another question for you too. Is there anything you guys are seeing out in the market that we should know about, or that you think that we might not be aware of, or that benefit our community, our market, and continuing to sort of grow, see strength and stuff like that? Is there anything that we're missing, do you think?
We'll see where this one goes. So I think specifically there's an opportunity at Big White.
Yeah.
I think financing properties up there can be incredibly complex, specifically in Snow Pines with the way it's set up. For sure, yeah. And clients, but like all over Big White, right? Like it becomes very difficult to find lenders that have an appetite, and it seems to change fairly frequently. I think there's an opportunity, like let's just specify it in Snow Pines, right? There's essentially a fourplex, but it's one title. So it's a shareholder structure where, you're buying in as a percentage.
Yeah.
Most lenders are not comfortable with that. To me, it seems like a simple solution that one lender would come in, and then instead of having four lenders because there's four owners on one title, and lenders have a massive risk in terms of where they're positioned on that. One lender should just come in and eat up that market. And I know that would like deploy their book of business more on that, but if one lender had one building and they're in, they have four owners, they have all four positions on that. So I think, in terms of, I don't know if it would really like help our local economy per se, although Big White's a big driver of tourism here. There's a lot of builders up there and a lot of infrastructure that, can help, that would trickle down the effect in the economy. I think having better policies up there with a local lender that understands it could be somewhere for some growth to happen.
That's an interesting, because I've not heard of that structure before up there. So having a sort of a shareholder structure, having four lenders in that would be complicated and challenging. So I can understand it. So I'll have to take that away and have a chat with the team. Just for note, we were the first financial institution to go back into Big White back in 2020. And I think there was a 12-year hiatus on any new construction, something like that. And we looked at that market, looked at the community and said, okay, let's support. Because if we can continue to flourish at Big White and can see that grow, that would be so good for our city.
I did finance a property with you guys up there last year. Like every lender is so case by case at Big White. It's wild. So I think there's a bit of an opportunity there, specific more to like the Valley region. There's actually like great policies from credit unions specifically for First Nations land and mobile home parks. Like there's a lot of like local credit unions like you guys specifically that do really well in those spaces because you obviously understand like some of those lease structures where some of the bigger banks or monoline lenders we can't facilitate any lending with. I think from that side, you guys are doing an awesome job.
Oh, well, thank you for that. Thanks for that feedback. And also thank you for your membership too, because you're a member.
I am. Yeah.
Can't do it without you. So appreciate that. Thank you. I got to throw that.
We'll probably have to start moving to wrap this up, but I guess maybe like a final take on this is what are your goals as a credit union moving forward? Like where would you be happy to see, in 2-3 years, if we were to come back to this conversation, takeaway that you could be like, hey, this is something that we've been working on and we were successful at achieving that?
Well, I think this was sum it up in one paragraph. I mean, I think the Okanagan continues to be one of the most attractive regions in Canada to live, work, and invest. So our job at Valley First and as part of the Tru Cooperative Bank is really to help individuals and businesses navigate that growth confidently and sustainably. So I hope that if we came back in 2 years that, we've continued to deepen our roots in business and in commercial and all the segments of commercial, but really demonstrate that by having us in town has a marked impact on the local economy and the communities that we serve, and that we can demonstrate that we are supporting that and we are a growth factor in that. So with AI coming, that's only going to help our ability to do that and to really spend more time understanding our members' needs and then being able to provide solutions and recommendations and be a trusted partner and not be just a commodity or a transaction. It's about that partnership and that relationship. So if we can continue to sort of execute there and support and stay true to our roots, because at the end of the day, it was 80 odd years ago is where we were founded, and it's the commitment from all of the communities that we serve is what allows us to do what we're doing, and we want to pay that back and deliver for our membership. So in a couple of years' time, I hope that we can demonstrate that, and I can show you an impact report that says, look, we're having an impact and it's a positive one. So.
I love it.
Me too.
Thanks for coming on and thanks for the work you guys are doing. You are a driver for our local economy and, building and independent businesses, as you phrased it, which I like. So appreciate the work you guys are doing.
Well, thank you for that. And we're also open to feedback too. So you hear anything? We don't sometimes get feedback, only negative, but
You're not the only one.
So let us know and stay connected. But thank you for the connections and what you guys are doing, and just keep us posted. I will take away your structure though. That's an interesting structure. I've not heard that. So
we can connect offline. Happy to tell you all about it. But I think there's an opportunity for the right lender in there.
And if you want to come down to watch England beat Argentina,
yes, we never even touched on that. Yeah,
table at the yacht club at noon, and
I was just going to say, you're clearly cheering for Argentina, right?
Oh, yeah, can you tell? But I really appreciate the opportunity to try this as well. So thanks for this.
Thanks a lot, Simon.
All right, guys, catch up with you soon.
All right. Yeah, see you later.